So navigating homeownership, the path to owning a home. This is a great class and a great class worth of information for real estate agents to relay to their customers, but also for primarily for the homeowner. Sometimes people have done home ownership before, and then they've had a change in circumstance where they had to sell. Maybe they went through a divorce or a death in the family or something like that, and something's changed. And so this is a totally, we're navigating in a new market. Yes. Yes. So sometimes you need to hear this information again. So it's not just about first time home buyers, but it definitely, will gear that information will gear towards that. So we are doing a navigating homeownership class the first Thursday of every month for the rest of the year. And we may do that going into the new year. And that way we're being consistent. And then the navigating homeownership PowerPoint might change a little bit depending on the market and things like that. I have my glasses on today, y'all. um, but for those that don't know me, I'm Stacy. I am in the Flower Mound branch today, and the branch manager and a loan officer. There's a couple other loan officers we have on the call today, so I'm going to introduce them. Um, Ken Melber is in Spring, Texas. And if you're in a situation where you're looking to, especially if you're looking to buy a condo or a vacation property in Bolivar Peninsula, Crystal Beach. Look, I said it right. He is definitely your guy. He does a lot of business down there and does really well. Our branch admin operations person is Kelly Campbell. She yields the roost when it comes to all things appraisals and title work and a couple of other things. Kind of puts up with our crew. And then branch manager and loan officer Ben Sinclair. And I know Ben personally because I'm also married to him. That's just a side note. So y'all don't have to look it up on social media. I did marry him. So um, he and I are we have tired eyes today. He's at the house and I'm at the office because we've been taking care of a sick 10-year-old this week. That was not scheduled. So let me just say. So that's what we're doing. And then I see Melissa, Brittany, Becca, Priscilla, Kanisha, Val, and Lizzie. And some of y'all are realtors, and then some may have be from the class. I know there was a realtor class that Ben did recently, and then we put it out in the airways. So navigating home ownership, the path to home to owning a home. I'll just get started, and the first thing I always say is just a little bit of a disclaimer because it can well, also in that you can put any question in the chat, and you know the chat can be answered by other loan officers or whatnot. So if there's any question that you have in the chat, you want to put that in there. I One of the things I always do on this disclaimer is we are affiliated with lots of title companies and realtors and things like that, and we are affiliated with them, but we don't control what they say. So sometimes, they say all kinds of things. So we are responsible for Premier. Premier is owned by NTFN. They own several mortgage companies. We're the flagship of that. Rates can change daily. Like if we talk about a rate today, I just talked about a rate with a customer yesterday, and this morning he was like, "Hey, can you give me rates for today?" I told him what they were, and he said, "Well, why did they change?" Well, because that's what they do. The rates change every single day. So that's just our little disclaimer, financing disclaimer. Um, the I always show this picture. This is my childhood home. I was born in Dallas. I was raised in Arlington, and boy, the things that I would tell that kid about life that I would give myself an advance notice about. um, but this house, my parents rented this house, my childhood home, for 19 years, and they didn't rent the house for 19 years because they weren't capable of making a payment. They rented it for 19 years. They wanted my brother and I to go to the same schools, which they accomplished that. But they rented it for 19 years just because they didn't know what to do. They, part of it was just education, and part of it was timing. And what I mean by timing is that everything, people, it's like I ask people all the time, in the era especially in the era of COVID, people were like waiting to see what the rates were going to do. Sometimes we're always just waiting for the best season to do something, and sometimes we just have to jump in to the season that you're presently in, and get, and get with it. And that's what happened with them. And anybody that has kids, and my daughter's about to be 11 years old, and I can remember it like yesterday when she was a baby. And so time just goes by really fast. So I enjoy being able to share information. My mom now lives in a home in Flower Mound that she is 82 years old and has equity in it. And I like showing that. I also like to show the bathroom that I had to share with my brother, because I'm doing a remodel at my house right now and we are not using this tile. Like this will not be the fancy green tile that we're using. Or and then, my grandmother dressed me in the dress. So that's what that's all
But
about
lime
there.
is in.
That's what?
But lime is in.
Lime is in. Lime is in. Yes. Yes. And I have to tell y'all, this we got this off realtor.com. Like they haven't changed it. Like, this is what it is today. Like, I'm not joking. 1920 Westview Terrace. Minty fresh, Becca says. Minty fresh. So, very crazy. Crazy, crazy. This is my daughter Landry, who I just talked about, and then my husband Ben, and we enjoyed a trip in July in New York. The bicycler, I have to admit, made it drove it was a little crazy for him, but it was fun. And if you don't, I'm sorry. Can you guys see this whole slide? Am I doing this wrong? Can you see it? There we go. That's better. So there's a lot of experience on this call. I've been doing it for 20 years. We do all types of loan. I have people will call and they go, "Do you do a VA loan?" Yes. "Do you do a conventional loan?" Yes. Government, jumbo, first time home buyers, seasoned buyers. We'll even work with that. We do very well at working with self-employed buyers. I've learned a lot from Ken with self-employed buyers and complicated tax returns. He's great at it. And our office here was voted best in Denton County for 2021, and we just found out best in Denton County 2022. So we went for the repeat. So that's a good thing. So we're excited about that. So we're here to supply all kinds of information for you. If you want to take a picture of this, I know that some of you I can't see on camera. Melissa, Priscilla, Brittany, if y'all want this, you could take a picture of this for your use later. I did a podcast about credit. I did this podcast with Texas State Affordable Housing Corporation and TSHAC, TSAHC.org. That is a website that will give you a ton of information. But this QR code will lead you to that podcast. It's a 30-minute podcast. You can listen to it while you're going for a walk or driving in the car. I feel like it was a good interview and there was a lot of questions related to credit for it. Rent versus buy and compare the cost. So when I go back and I think about the house that I showed you that my parents owned, the thing is that over the life of that loan, in that situation, it the mathematics that I worked out to be is that they spent $496,000, over that time, $496,000. They probably could have bought it, a few during that time. And I just encourage people, and renting has its place, but I just encourage people, when you purchase a home, that it puts you in a position to build equity. And we're not just trying to teach you how to purchase a home, we're also putting you in a position where you can sell a home. And when you sell that, you buy something else, you can upgrade, downgrade, um, build some equity. We have a lot of people that are doing a cash out of their equity, and they're parlaying that money of that equity that they've built, and they're parlaying that money and purchasing second homes down in Crystal Beach, for example, or in other areas. I'm working on several investment properties right now. I've got a realtor and an investment customer that is buying in Farmersville. Apparently, Farmersville has become a, yeah, kind of a growing area. And there's a lot, and with the cost of rent right now, investing in a property, means it makes huge sense. What we talk about is, you want to stop paying the landlord's mortgage and start investing in your future. So, discussion topics today: should I consider buying a home? Am I able to buy a home? How do I get started? And the path from loan application to home ownership. So we're going to cover those topics. What I encourage is in the chat, if you have questions, put those questions in there so I can make sure that we talk about them talk about them during the call. The rent versus buy and the cost of renting, I've certainly given you several comparisons, but the money spent on renting after 1, 5, 10, and 15 years, and this is a graph that's based on $1,500 a month. Lately, is rent's kind of higher than that, right? You know, rent has become a bit higher, and over the life of 15 years. So you're just kind of looking at that graph and how much money that they've spent. Historical mortgage rates by length. This kind of gets you from 1991 to 2022. I know that there's a lot of discussion about rates, and I know rate is important in terms of what you think about in terms of your payment. But what I try to explain to people is that the history, when you look at this graph, you can see that even though the rates aren't what they were in 2020 or 2021, they are still historically low. And so the market corrected itself. And so that's what I try to remind people about is that it was just, literally a market correction. But it's still historically low. And again, rent versus buy, home value over time, the increased annual appreciation. So the the one thing that's for certain is rent is not tax deductible. So the interest on a mortgage loan is tax deductible. And when you're new, you may not know that. Your property taxes are tax deductible. The interest on your loan is tax deductible. And like again, when you're renting, like if somebody's renting at $1,500 a month, they can probably afford a mortgage that's $1,800 or $1,900 a month because of that tax deduction. You could literally make the adjustment to your W-4 so that you have more take-home pay because you're now going to have a tax deduction that you haven't had before. And once you have a first full year of that tax deduction and you feel that tax deduction for the first full year, it's a fairly amazing experience. I have a lot of people that'll go, "Why didn't you tell me?" Well, I tried to tell you, you know. So that is what you have to estimate the future home value. Now, what's great about being in Texas, what's great and sometimes not so great. What's great about being in Texas, everybody want to come to Texas, right? We got a lot of people from California coming here. We don't have a state income tax. And what's great about Texas is people want to live here. And what's also great about Texas is that our values have increased over time. We're still experiencing really good value over time with our property values. And I don't know if anyone really has realtor or loan officer wants to speak to that, but that would be something that this would probably be a good time to speak to your opinion about that and the overall value of the market. Anyone have $1.98 on that? Don't all jump at once. I hear laughter. Oh, here we go. Lizzie's got something.
This has been a challenge, let me tell you.
Yeah.
I have, I represent buyers, sellers, and renters. And we're seeing this all over the place in buyers, sellers, and renters, right? The 6 months ago was a little different, where the homes were just on the seller side being listed ridiculously high, and then we were having to worry about appraisals
Yeah.
coming in, right? That value coming in, and I'm sure you were experiencing the worry on your end.
Sure. Sure.
On the
Now we
for the
don't really have now the value now it's kind of like the sellers are coming back to reality and the values are
well, they're
being
having to.
consistent. Yeah.
They're
And
having nobody's looking at their homes now.
yeah. So but our market, wouldn't you say, and Val, I know you work down in Dallas a lot, but wouldn't you say traditionally our values are, we don't have to have huge increases, but the investment over the course of time increases in value?
Absolutely.
I can speak to that. Yeah.
Go ahead, Val.
No, go ahead, Ben. Go ahead, Ben. What were you gonna say?
Well, I'm one of those people that realtors don't like, because I've owned the same house, and haven't sold it for a long, long time. But I bought a house for less than 100,000 in 1999. I bought it for 99.9, and it's worth almost 300 today. And I've cashed out a couple times, paid it off. It's been a vehicle, just for me, it's been like a bank account. That when I really need some low interest money. Equity is always, most of the time, the cheapest source of money you can get, whether you want to invest it, buy another house, send your kid to college, or pay somebody off that you owe money. It's always a great source. And, all I've been doing is paying rent for the last, how many years is that? 21, 22, 23 years now. But it's worth about 3 times what I paid for it. So it's been a great tool for me to manage my personal finances over the last 20 years. And that's my $1.98.
Absolutely. I work primarily south of 20, so Mansfield, Midlothian, Grand Prairie, all of that. But just even my personal rentals, I have not really done rent increases really lately. When COVID hit, I just kind of put it on hold, but unfortunately I went ahead and rolled them out, especially some of the ones that are on Section 8, and those rents jumped. I did jump those rents up $500 because I was behind just on that part of it. But looking at it now, man, I bought those rentals some years back. So the equity in that is phenomenal. But at the end of the day, when I think about buyers, you are paying someone's mortgage. It's just a matter of when you will find an opportunity to start paying your own. So one of the things that I love to say is to fire your landlord and become the lord of your own land. Because at the rate that rents are
Oh, I
steady
love that.
yeah, that's
The
my
Lord of
favorite
your own
thing.
land. There you go.
Because at this point, rents are steady going up and up and up. Almost to the point in some places they're almost as high as paying a mortgage. So it's like, how can we help you move from renting into home ownership? Even if that means you cut out, as for ladies, maybe not getting your hair done as much, or maybe don't get your nails done but once a month. But where can we cut some things that we don't necessarily have to have, so that we can get you into home ownership? Because that's where it's at. So it's just a matter of planning it out and working with the right partners to get you there.
Yeah, definitely sacrifice. And I will say on my behalf, like, we were trying to figure out if we were gonna move or what we were gonna do. But the thing is, I love Landry's school. I love where our branch office in Flower Mound is located, and everything is within 10 or 20 minutes our life, and so we, made the decision to remodel, and boy, that's painful. But moving is painful, so but the reason we had the flexibility to do a remodel is because I had so much equity, and so sometimes you got to figure out what works best. And so having that equity, having owned it for so long, it's nice to be able to, improve upon the property and utilize that equity to make things happen. Lorena, I saw you pop in while we were in the middle of stuff, so I just wanted to say hi, that I do see you. Um, so Kelly Campbell is going to do a door prize. She's got we pop in with these door prizes, and she's got like a wheel or whatever she's doing over there. Oh, there's her wheel. There's a wheel of fortune. Can y'all see it?
Let's see. Is that better?
Love it. That's cool.
All right, here we go. The winner is Priscilla Santana. Woo woo!
Woo woo! She's got a nice
Woo,
journal
woo.
and some bluebonnet seeds, and
Yes,
she'll get that mailed out. If you'll send Kelly in the chat, you don't have to chat for everyone, but you can send it directly to Kelly an address or shoot an email. Kelly, in the chat, you can put your email address and shoot her an email, and then she'll get that sent out. Okay. So factors that consider the loan approval: credit, down payment, and closing costs. So credit, we run all 3 credit bureaus, and we look at all of those 3 scores because different entities report differently. Sometimes you have a car payment and it only will report to TransUnion, or it only reports to Equifax. And sometimes you'll have credit and credit reports to all of them. So with credit, we want positive trade lines and history. Positive trade lines and history. So that's real important. Down payment and closing cost. The minimum down payment for conventional is just very interesting. Val was with me recently when we went to Communities and Schools of the Dallas region. Their preferred lender at Communities and Schools of the Dallas region is Premier. And I think Kenesha was on here earlier, and she was out of school. Oh, there you are, Kenesha. She's out of school, and so we were doing a presentation and I was shocked when I did a poll and I asked everyone in the poll, what's the minimum down payment for conventional? And I had choice A, B, C, D, and most everybody picked 20% down. And the minimum down payment for conventional financing is 3%. So when you're a first time home buyer, you can put down 3%. And I would say probably more frequently we'll do conventional loans with 5% down. And if you're trying to avoid mortgage insurance premium, you can put down 20%. But if you're a first time home buyer, 3%. So if you're purchasing, and I'm just using this for easy math, but if you're, purchasing 200,000, that's $6,000. So you can put your down payment, or there may be closing costs that are available that we'll talk about in terms of from the seller, but also with other programs. The debt to income analysis. We're going to get a little deeper in this on another slide, but essentially debt to income, your monthly obligated debt divided by your income, including the new mortgage payment. So just keep that in mind. And you really want that debt to income ratio. I think that there's no hard and fast rule on debt to income, but I think when you're purchasing a home, if you can keep that debt to income ratio 40 with the mortgage payment at 45% or less, you're much better off. So I'm not saying we can't do it if it's higher than that, but really that's kind of a good threshold. Factors that affect your credit score: paying your debts in a timely manner. My husband loves it when I say the best predictor of the future is the past. So that I always say that as applied to going fishing and leaving me home alone. But the best predictor of the future is the past when it comes to making your payments. So if I'm a lender and I want to lend money to you, and all I see on the credit report is late pay, late pay, late pay. So not just a one-off situation, but a regular situation. Am I going to feel all warm and fuzzy to lend money? Probably not, because we want to see a good payment history. And again, sometimes you have a situation, life hits us, right? So sometimes there's a death in the family, divorce, something happens, and it's just a one-off situation. So we understand bumps in the road. So we're going to try to help with that. But we want to pay debts in a timely manner, keeping your account balance as low as compared to your approved credit limit. So recently I purchased something on Home Depot and I didn't want to use all of the credit that was available to me. So I only charged a certain amount. So to keep my balance from what I owed less than 33%. Because if I keep all of my credit that I owe, if I max it all out, it's going to hurt my score. All the credit that I owe, if I keep all the credit that I owe less than 33%, my score is going to be good. So on my Home Depot, I paid cash for part of what I wanted to buy. I bought a Tough Shed, paid cash for what I want to buy, and I charged $2,000, because my credit limit was much higher. But I didn't want to put too much on that credit account. I liked it. I liked the flexibility of doing it at 0%, so I could pay on it at 0% for the next 18 months. A longer credit history can increase your scores. So sometimes when I'm talking to people on the phone about their credit, one of the things that they try to do is they go, "Oh, I'm just going to pay it off and close every account." No, don't do that. We like credit history. We like it's a positive trade line and it's a history of paying the account off. So don't close the account. We want good history. The hard part about people under the age of 25 is sometimes they have all new credit and they don't have great history because they haven't had it long. And so long credit history can increase your score. Good management of revolving credit. Opening new credit accounts or credit inquiries can negatively affect your credit scores if. So here's the thing. When you have credit, when you pull I get this a lot. We're like, well, we want you to give us a pre-qualification, but we don't want you to run credit. Is it a hard pull? Is it a soft pull? Well, it's definitely a hard pull and a hard inquiry, which is what we're going to need to do in order to give you a letter. The issue is that when you have different credit inquiries coded from different places. So you have a credit inquiry and the credit inquiry is a mortgage inquiry. And then you go to try to buy a car. And as far as buying a car is concerned, get that loan secure in advance. Like go to the car dealership and say, I already have a lender. You know, my credit union is going to lend me X amount for a car. Because if not, when you go to the car dealership, they're going to run it multiple times because they're going to run it with a lot of different entities and you're going to have all these inquiries. If you go to Kohl's and you run their credit and then you go to Target and you let them for their credit card. So you have multiple inquiries and multiple different coded inquiries. That's what affects your credit score. That can negatively affect. I love this little wheel because it just goes and it kind of explains how your credit score is impacted. Payment history is 35% of your credit. So when you pay late, you can't they're there forever. They stay. So you don't want to do that. Amount owed, length of credit history 15%, credit types 10%, new credit 10%. But that most important part in that wheel is credit history. Any questions so far? How much money do I need for a down payment? Kind of talked about this a little bit
Hey,
earlier.
Stacy,
Yes, sir.
I got two quick things that may
Sure.
apply to that last one. And it goes back to credit score where Stacy went the example below 30 or 33%. A lot of times I'll see somebody with $1,000 credit limit on a credit card and they may charge $500-600 a month and they pay it off by the due date. Well, one thing they do not teach you in school is once your statement cycles, it reports the balance on that day, and typically it's not due for 3 weeks. So even if you pay your credit card off every month, you will always have a balance on there if you don't pay it by the statement date. So there are two things in that example somebody could do. One, if they've paid on time, instead of $1,000 limit, even though you don't need more than 1,000, try to get them a $3,000 limit. So that way, automatically, you're below that 30%. And the other thing, and this is what I do every month, is I've got a Citibank card I've had for 25 years and I get 2% cash back. So I've got 20 to 25 accounts that auto pay on that every month. And so my balance is big every month. What I do, it typically cycles on the 23rd or 24th. So on the 21st or 22nd, I pay it in full. So I get the convenience of it, but yet when the statement cycles, it'll show a low balance, so it doesn't affect credit score. And they don't teach you that, and they should. And then the last thing I'll do on that is I redid a house one time, and I didn't want to get a bank loan, and I put it on credit cards. And even though I've never had a late pay on my credit, by having the high balances in 1 month, my credit score went down. It was either 69 or 79 points. So I paid it off the following month and it went back up to where it was. So what I'm getting at by this, there are two simple things somebody can do. And sometimes you're talking some big numbers on your credit score. Either pay it off a couple days before due date or raise the limit to where you're below that 32%. And those two things are easy to do. They do not teach you that, and you should, because that can have a huge impact on your number. Because as Stacy and Ben can tell you, sometimes 1 point on a credit score, somebody can qualify or not. So
And
it does.
the threshold, just to kind of parlay what he's saying, the thresholds of credit are so important because, the interest rate can be improved, set a 680 score, then a 700 score, a 720 score, a 740 score. Like, I'm working on a purchase that, it's like a $1.1 million purchase. Well, the fact that his credit score is a 786 instead of a 776, the rate is better, so it's all of that, it's usually every 20 points where it makes the threshold difference.
And it will
Those are all-
also affect your mortgage insurance payment too, the same way. The better your score, the cheaper your mortgage insurance if you're not putting 20% down, which a lot of first-time home buyers don't. So it helps out, and the higher
and
your
your
score, the
and
better
your
off you are.
homeowner's insurance too, I think.
Yeah. Now your homeowner's insurance too. You're right.
How much money do I need for a down payment? If it's an FHA loan, that is a Federal Housing Administrator loan where it's a little more. Why would you use an FHA? It's a little more forgiving with debt to income. A lot of first-time home buyers sometimes will use that type of product. It's a little more forgiving with credit scores. If you've got credit scores in the 600s, that's usually has more potential for approval. Conventional, as I mentioned earlier, 3%. If you're a first-time home buyer, 3 to 5% is the lowest down payment. If you put down 20% on conventional, you won't have mortgage insurance premium. We love veterans. We love our veterans. I'm a certified veteran lending specialist, and a VA loan is 0% finance. It's 100% financing and 0% down payment. We love veterans. So consider that as far as if you're a veteran. Ben's here because of two veterans. They were both in the Navy. If his parents hadn't met in the Navy, then I wouldn't have got to meet him. So there you go. USDA is a rural loan, a rural area. That's also 100% financing. It's becoming more and more challenging to find rural areas that qualify for USDA. How do you know if it qualifies for USDA? We plug in an address. You can go to the USDA.gov site. That's how you geography. We look at geography to determine if it qualifies. So closing costs and prepaids. In addition to the money needed for down payment, there are other costs to consider. These costs can be paid in three ways. The borrower paid, lender paid, or seller paid. So costs related to a loan can be an origination cost. You can have an escrow fee, like a closing fee for the title company. Appraisal is we appraise the cost of the value of the house. We appraise that. That's a third party fee, and that's frequently paid outside of closing. Title insurance, we insure to make sure there's no cloud on title. Make sure that you have full right to the deed of that property. Recording fees. Every county in Texas charges a recording fee, to record your deed of trust and your mortgage note. Prepaids, 1 year of homeowners insurance, that the property is insured with insurance. You want escrows of your taxes and insurance. An escrow account goes into an account that when you're making your payment every month, that escrow is protected with your taxes and your insurance. And when the taxes are due, it's paid out of the escrow account. And when the insurance is due, it's paid out of the escrow account. And that's what makes up your payment: principal, interest, taxes, and insurance, and then your daily interest on your loan. And items that are paid outside of closing are home inspections and potentially a new survey. So if the property has an existing survey and nothing has changed to the property, they haven't added any permanent fixtures, or they haven't added a pool or something like that, then a lot of times with Premier, we can use that survey. We like to get the title company to approve the survey, and if they approve the survey, then we'll use it as well. Home inspections, there's not any real estate agent that I work with that would not recommend a home inspection. They would totally recommend you get a home inspection so you can know what is going on in the home and what repairs might be needed for the home. But those items are paid outside of closing. So the costs: borrower paid, meaning down payment; lender paid, or seller paid. Sometimes the lender is able to assist with closing costs with programs or within the rate. Sometimes now the seller is paying some closing costs. A year ago, a seller was not going to pay for a title policy or a survey. I just got a contract in last night, and the seller is paying for a couple of those items and a few other things. So that's just something to consider. Now we can ask, whereas before it was like not even a question you could even ask. So if anybody has any input on that, if y'all put that in the chat, that'll be great. I know some people are on their work lunch hour, so I'm going to try to get finished here on time. Possible sources for down payment, checking and savings. Your money does have to be sourced. Any money that we use in a mortgage transaction must be sourced. Mattress money is great. I understand. I have some of my own, but it has that you can't. Yeah, I just saw your reaction. But I have some of my own, but you cannot. That is not sourceable income for a mortgage. You can't show up with a bag of cash. I had a guy walk into closing. This was several years ago, and he walked in with literally a brown paper bag with some cash in it. No, no, no. So this money has to be sourced. It has to be put into account. Val and I have a customer I was visiting with recently, and that customer is lovely. I love her to death, but she doesn't trust. She goes, "Well, I don't trust banks." I'm like, "Well, I understand, but I have to source the money has to be sourced. So we have to figure out exactly, and it has to be seasoned. So you have some money that you want to use towards down payment. You want to have that in the account, and it needs to go through 2 cycles, 60 days or 2 bank cycles. Gift funds. You can have gift funds. You can have gift funds from maybe an employer. You can have gift funds from your mom, your dad, your uncle, your sibling. And we create a gift fund letter that they would sign, and you would sign that gift money is going towards the purchase of your home. 401k. A lot of people have a 401k loan and sitting there, and they don't know that they can get money against it. You could get what's called a hardship loan, and a hardship loan is a type of loan that you're able to get when you're a first-time home buyer without penalty. So a lot of there's different 401k administrators, but you can call the person that's administering your 401k, and what you want to ask them is, what are the terms of withdrawal? Just give them a call. What are the terms of withdrawal? Cash value of life insurance. I had a customer recently that had a small life insurance policy that wasn't growing in value, that was purchased when she was very, very young, like 5 years old. And it had this cash value, and it was like $5,000. And again, it wasn't growing in value or anything. And it was somebody gave it to her, and the family member gave it to her. She didn't even know it existed. And she used that cash value of that life insurance to be able to purchase a home. Down payment assistance programs. We use a lot of down payment assistance programs, TDHCA, Seth. The main one that we choose to use more than anything is TSHAC, Texas State Affordable Housing Corporation, tsahc.org. You can look on their website, and we are featured because we do that a lot. We enjoy that program. I teach a 1-hour CE to realtors on that program, and I have one scheduled for October 3rd. So I may do that class virtual, just giving you all a heads up for 1-hour CE. Second job. A second job is not a source that I can use for income, but it's definitely a source that we can use for your down payment. So if you have a second job or a side hustle, especially this time of year, going into the fall and going into the holiday season, a lot of times people will pick up like second jobs for 10 hours a week. And what you got to do is think about 10 hours a week, what that is hourly, how long, and where does that money go? Sale of personal property. Sometimes we have, spouses that buy extra boats or motorcycles or whatever. And he's not listening. You can sell that personal property, get a bill of sale, and that's an appropriate source of down payment. Some employers have assistance programs. You don't know if you don't ask, so you can check into that. When people do their IRS, their taxes, you can get a tax refund, and that's good to look into as well. A mortgage credit certificate is not necessarily a form or a source of down payment, but it is a mortgage credit certificate is something that you can utilize again when you're a first-time home buyer. That that allows you to have a credit on your taxes that we can utilize to show more take-home pay. So if you're working with a lender and they don't know what a mortgage credit certificate is, you should reconsider. So Those are all really important things. So all those topics there. How much can I afford? So let's talk about this. I said that we were going to kind of break down debt to income analysis. Total of monthly debts divided by gross monthly income. So we're just going to use an example here so that we can explain how we derived at a 45% debt to income ratio. So combined monthly income, $8,000, and then 45%. So 45% of $8,000 is $3,600. And you say to yourself, well, I have credit card, money for credit cards that are going out every month, and my monthly obligated debt. It doesn't matter to us what you're paying on the debt. It's what you're obligated to pay. So, for example, I might have a credit card that I have a $2,000 limit, and my monthly obligated debt might be $150. Well, somebody else could also have a $2,000 credit card, and their monthly obligated debt might be 100. But the person with the higher debt to income is the one that has the debt, that the payment that's a higher obligated monthly to pay. So a lot of times when people go, oh, well, on the credit report, it shows that my monthly payment is 150, but I'm paying 200. Well, that's fine. All I care about is what you're obligated to pay monthly. So I'm obligated to pay $200 a month in credit card debt. I'm obligated to pay $300 in car payments, which, by the way, car payments and student loans, whoo, it's bad. They're killing a lot of people. We're young people that we're talking to. Ben had a guy the other day, and he had a $700 car payment, and he's like, "What are you driving?" "Oh, I have a badass truck. It's awesome." Ben's like, "Do you have a pillow? Because you're gonna sleep in the truck." So car payments, $300, student loans, $400, total debt in this example, $900 a month. Monthly debt allowed for 45%, $3,600 minus what they're paying in debt is $900. So the amount allowed for housing, a $2,700 payment. So you got to think about what is your gross income, your gross monthly, income. We go off the gross. And so you have to think about that in relationship to whatever other debt that you owe, so that you can determine the 45%. I hope that makes sense. If you have questions, like I said, you can always ask us in the chat or email us and we'll answer. What's included in my monthly payment? Principal, interest, taxes, and insurance. So the principal is the amount that you have borrowed. The interest is the percentage of the principal based on the interest rate. The monthly taxes for the area that you've purchased the home, the county taxes, city taxes, and then your monthly insurance that protects the home. People go, well, do I need insurance? Yes. So the insurance, it protects it against wind and rain and fire, and all of that goes into your escrow account. The only other thing I would add to your PITI here is also if you have mortgage insurance premium. So mortgage insurance premium would be an additional PIT part of that if you don't have 20% equity. And then how do I get started? So anybody that you choose to work with loan officer wise, they're going to ask you for some items, and you can submit an online loan application. You can submit an online loan application to my link, then it can be utilized. I got an application yesterday. I moved that loan into Ben's prospects. And so anyone can take a look at that. Kelly is now a licensed loan officer. She looks at some of them too. If it's faster for her to look at it than me to look at it, but we all look at them. But the items that we're going to need, current pay stubs. Sometimes we can do a verification of employment and not need the pay stubs, but we just have to have something that reflects year-to-date earnings over the course of a 30-day period. We're working on a loan right now, and the gentleman is in car sales. He's in car sales, commission sales, so I'm going to need 2 years tax returns. I would need 2 years tax returns if someone was self-employed or a W-2 with commission only. 2 years W-2s for all wage earners. A photo ID. It doesn't have to be a driver's license, but it has to be a photo ID that's not expired. You cannot go to a title company and close on your loan with an expired driver's license. Title companies do not like that. So keep that in mind. Most recent 2 months assets for all accounts used to qualify. Talked about that earlier. We got to source all the assets. And this I put on here. We utilize these 3 things: day one certainty, account check, and work number. I'm gonna just say this. I love to do these classes, and I do these classes for anyone, and you can work with any lender and still take my class. That's fine. But if you're working with a lender and you ask them if they use day one certainty account check and work number and they don't know what that is, then you do need to find a new lender, because those three things allow us to streamline and ask for less documentation. So we're a big fan of less, documentation. We're going to get the documentation that we need, and not weigh you down. Caution. During the loan application process, it's important to understand that you don't want to make certain actions that are going to prevent you from getting a home. I was talking to a gentleman yesterday. He's interested in refinancing. And then in the same conversation, he said he has an interview today for a new job. And I was like, well, that's great. I said, do you want to wait until you decide if you're going to take that new job? We don't want to start a refinance if you think that you're going to get, change jobs. So he's like, I'm just going to use it to increase my pay where I'm at. Like, okay. So you don't want to change employment. You don't want to have a significant increase in credit card balances. So when you're a first-time home buyer, maybe I shouldn't say this while I'm being recorded, but we think that Nebraska Furniture Mart might be the devil, just for the record. So it's a great place to go, but after you've closed and funded on your loan. So don't go buy $20,000 worth of furniture before we've closed on your loan. You don't want to have huge increases in that way. Reduce asset balances. You don't want to spend all your cash that we've told the underwriter that you have. You don't want to fail to disclose all debts. So this is a big deal. So sometimes on a credit report, it's not going to tell us if you're obligated to pay child support or something else, but it may come up somewhere else because it might show up on a bank statement. So just tell us, because that way we know what you're obligated to pay. Don't apply for new credit. We're in the middle of a loan transaction and you run your credit. It's going to show that it's going to show us that you have an inquiry. So you don't want to do that. Don't make large undocumented deposits. I had a gentleman that said he was getting gift funds from his in-laws. I said, okay, well, I'm going to give you a gift letter. And I said, and I'll let you know when to transfer the gift money to the title company. And he's like, I've already accepted the money into my account. I'm like, okay. So I pulled the statements and he has a foreign wire transfer from Colombia. So we don't want foreign wire transfers from places that we can't source, but it was a foreign wire transfer from Colombia. So we got it worked out, but we don't want to have undocumented deposits. I'm telling you, Ben and I, we have done some loans. Don't change banks. Don't get mad at your bank and change banks. And don't move money from one account to another. I had a loan I did for two sisters, and they just constantly moved money in and out of each other's accounts. It's very, very hard for an underwriter, very hard for us to track. So that. And then cosign a loan. We all love our children, our adult children, but and Ben's shaking his head. Do not
Only adult children.
don't cosign loans for your adult children. Don't do that.
And
Because
with today's technology, it's monitored literally right up until you close. I've gotten a call at the closing that they got a new inquiry. So close and fund the transaction. The next day you can go crazy because the auto and the furniture people, they don't care about all these things as much as your mortgage person does. So it's monitored up to the minute you close and fund that loan.
yeah. Yes. So having your own realtor is so important. Oh my gosh, y'all. I cannot tell you. Everybody now thinks I've watched it on YouTube. I can do it myself. I don't need anybody's help. You are entering into a contract. It's a contractual agreement. I would not go into a courtroom without proper representation with license with an attorney, right? Past the bar. I would not. I used to say I wouldn't go in a courtroom without Johnny Cochran. He's passed away, but I love that guy. So I would not go into surgery without a surgeon. So you have to have a realtor is important. These are some examples of why that you would have, why you would have a realtor and why this is important. I'm just going to put that screen up there again because having your own realtor is so important. And we have some on the call today, and I know that they would nod their head, yes, yes, yes. But some examples that are important that you need a realtor is they help you find the perfect home, explains each part of the contract, like what you're signing. They're licensed, so they can they explain it to you. They negotiate and present the offer, schedule and guide you through the home inspection, communicate with the seller's agents, the title company, and schedule your loan closing. Here's the thing, when you're purchasing or even when you're selling, it's an emotional deal. It's an emotional decision. You want to have an experienced realtor. You want to have somebody that can stabilize the situation, take the emotion out of it, and help you guide you and make decisions. But the biggest thing is you're in a contract, you're entering into a contract. So you want someone to represent your interests. This is very important. From contract to closing, purchase contract, we're going to disclose the loan within a 3-day period. We're going to lock a rate if that's a possibility. We're going to send to processing and underwriting. And during this time, when we first get a contract, I got one last night, right? Hurry, hurry. We move really, really fast. And then it's kind of hurry up and wait. We're waiting for the title search to come back. We're waiting for an appraisal to come back. You're going to check and see what's a good hazard insurance. Then we're going to get back with an underwriting approval. When we're done with the loan and we have a clear to close, we're going to send out a closing disclosure. Then they're going to be closing day. And then when you go to closing, you sign your documents. All title companies work during the week, Monday through Friday. So when I'm trying to schedule closings, people are always saying, well, I work during the day. I can't do that. So do the title companies, just like your dentist, your doctor's office. They're professionals. They work during the day. So you come in with your driver's license and whatever funds to close, or you wire funds to close. And that's how that works. It's from contract to closing. And we always ask that you follow us on social media. All of us are on social media, Ken, Ben, myself. Give us a shout out or tell us if we did a good job or all of that. That's we always ask for leave us a review. I wanted to close on time, and we're have like a minute or two left if there's any questions. And I was gonna have Kelly do one more drawing. You don't have to do the wheel because knocks out. You can do the wheel to yourself because it knocks out our deal. But I was gonna have her do one more drawing, and then if you had any questions, Becca, did you have a question? You unmuted yourself. Nope, no question.
Thank you, though.
Good to see you.
You too.
All right, the winner is
I have a question.
Melissa Torres.
Melissa Torres. Cool.
Melissa, you're the winner. Winner, winner, winner. Chicken dinner.
Woo!
So email Kelly with your information so that she can get that mailed out to you. And Taylor, I saw that you came in a little bit later as we were going along. If you have questions, let us know. Hey Taylor. Hi.
Hey,
How are you?
doing well. How are you?
Good. We recorded it, so when we get that recording done, we'll send it to you, Taylor.
Perfect.
So that will help probably. Any other questions or anybody's input that to help us do better?
I have a couple quick comments.
Yay.
First of all, the realtors that are on this phone call, there aren't many people that learn to do continuing education to make yourself better. Ben and Stacy are a wealth of knowledge. They've been doing it a long time, and they don't go. And one thing I respect about them is they don't go for the one transaction. They go for that transaction. They go for their kids, their friends. They educate clients. And I want to make sure that you keyed on one thing she said, and here's how confident I am. What she said earlier will get you at least one deal the next year. And if you don't get it, call me on September 1st the next year and I'll give you $100. I'll see if you were paying attention. If you've talked to somebody that said, I can't buy a house right now, I don't have any down payment money, it's on my house, I have to sell my house first. Raise your hand if you've heard that over the last year.
Yeah.
Contingencies. Now, in the past, they haven't, but you may start seeing some of those. And the second thing is at least I'm in the Woodlands and just north, we've got people paying $2,000, $3,000, $4,000 a month in rent. How many have had a renter that have said, I can't buy a house because I don't have down payment money? Well, what she said, yep, me too. What she said earlier is when you run into that situation, ask them if they have a retirement account. I don't know if you caught on that earlier, but many retirement accounts allow you to withdraw up to 50,000. I'm sorry, borrow. You're not withdrawing. There's no early penalty, and you're not withdrawing the money from your account, so you don't have taxes. That renter, a lot of them have retirement accounts. They can access money, they can borrow, and depending on the loan, they don't count that payment against you on your monthly debt because it's considered a secured loan against your asset. So next time you come across that person that says, I need to sell first, ask them if they have a retirement account. When you have that renter that says, I don't have down payment money, ask them if they have a
I'm
retirement
gonna do a
account.
class. I'm gonna do a class selfie because you're laying it on him, Ken.
So
And he's right. You borrow your own money, it does not count in your debt ratio, so it doesn't hurt your ratios.
Oh, that's right. That's a good
people
point.
get bonuses at the end of the year. They buy a house now, they get their bonus at the end of the year, they pay off the debt. That is that will get you at least one deal this year if you just ask that question. I need to sell my house first. Do you have a retirement account? Have them call to see if they can borrow, not withdraw. And that'll get you at least one deal over the next year. I just want to
Raise
make
the
sure you
roof.
keyed
Woo,
on
woo.
that. So
Raise the roof. What did Ben? Did you have? You said you had a question.
Yeah, I just wanted to know where you hid the mattress money.
Oh no, not telling. Yeah, especially now. Okay. Well,
'Cause you know,
Taylor, yeah, no, I get it. Y'all, I'm telling you, the remodel, it is, you would not believe our house. If anybody has a really good person that's an organizer, a professional organizer, I need that person. So I'm gonna need to pay to help me unravel the scariness of my current house. But it's looking good though, so we're gonna get there. All right, boys and girls. Well, thank y'all for being part of this call today. I really appreciate the realtors that jumped on, and we'll get this out to a few of you. Taylor, thanks for jumping on, and Lorena, Melissa, Priscilla, Kanisha. So hugs to y'all. I know you got to go back to work, and again, we're at first Thursday of every month. We're gonna do this. Learning is fun. Bye, y'all.
Thank y'all. Thank you. Thank you. Thank you, guys.
Thank you. Have a good one.